Hi, everyone. A very good morning and good afternoon and potentially evening, depending on where you're dialing in from. And welcome to this InsurTech Rising webinar. This webinar is called The Battle for the Customers, and we will be discussing how new entrants are changing the dynamics of insurance. I'm going to be your moderator today. My name is Stephen Goldstein. I'm the U.S. Country Director for Pivot Ventures and the weekly InsurTech writer for dailyfintech.com. We have a great bunch of panelists with us today. I'd like to welcome Tim Attia, CEO and co-founder of Slice Labs, Mike Rudoy, CEO and co-founder of Jetty, and Ryan Hanley, Chief Marketing Officer at Agency Nation and TrustedChoice.com. As I mentioned, we'll be discussing how new entrants are changing the dynamics of insurance and a few areas around the customer experience as it relates to insurance. A couple of housekeeping notes. We will be live tweeting this webinar, so you can join in the conversation using hashtag InsurTechWebinar. If you have any questions during the presentation, you can feel free to send them using the Ask a Question on the left-hand area of your screen or by tweeting us. To introduce our panel a little bit more in detail, Mike Rudoy is the co-founder and CEO of Jetty. Jetty is a New York-based financial services company that designs products and solutions to help people reach their life goals faster by removing obstacles and risk. In 2015, Mike was feeling the frustrations of the home rental process, so him and his co-founder Luke started Jetty, where they designed a all-encompassing solution that saved customers time and money when they're looking at their renting experience. Jetty currently offers 3 products: renter's insurance, as well as Jetty Passport, which includes both Passport Deposit and Passport Lease. Tim Attia is the co-founder and CEO of Slice, a technology startup providing on-demand insurance for the on-demand economy. Tim has been using his background in insurance and financial technology to apply intelligent design, data, and technology to solving the gaps and risks facing the growing on-demand workforce. Ryan Hanley is the Chief Marketing Officer of Agency Nation and TrustedChoice.com. As the Chief Marketing Officer of Agency Nation, which is an insurance-centric digital media company, Ryan leverages his 8 years as a retail insurance agent to educate and engage more than 300,000 insurance professionals annually. With more than a dozen Fortune 1000 insurance companies as clients, he uses social and content marketing to attract, nurture, and deliver consumer attention to over 20,000 independent insurance agencies across the U.S., yielding millions in new business premium each year. Ryan shares his unique industry experience and expertise on YouTube in The Show. And if you haven't been watching The Show, I highly recommend that you start watching that. We are very excited and fortunate to have all these panelists today. And you've probably dialed in to hear more from them, not from me, so let's get started. The first question that I will start with the panelists, and Mike, I'll have you start. I'd like you each to introduce a little bit more about your company's proposition and how you've built that with the customer in mind.
Thank you. So ultimately, the problem that we're trying to solve at Jetty is helping people access the home or the apartment that they're looking for. And as you mentioned earlier, we found that there were a number of obstacles that consumers face today in terms of reaching that goal. Sometimes it has to do with cost, sometimes it has to do with access, and sometimes it has to do with time. And so the bundle that we've created includes, as you mentioned, renter's insurance, a security deposit replacement, and a lease guarantor replacement. And that's very much by design because those are the 3 things that landlords, in many cases around the country, are asking for as a prerequisite to getting in the door. In the past, consumers had to, for a guarantor, maybe call a rich uncle. Perhaps they didn't have one and they had to ask their company to do it. With regard to the security deposit, it's oftentimes very expensive to live anywhere in the country, and so any help on the security deposit, which is oftentimes a month or more, is helpful. And then from a renter's insurance perspective, we thought that there was an opportunity to underwrite in a more seamless way And so the only information that we need is your address. And we've also added a number of coverages that we think make sense for the modern lifestyle, like electronics coverage, bed bugs coverage, and valuables coverage. As we think about our future, we are staying very customer-centric, and we want to think about what else could this consumer need from an insurance perspective to make their lives easier.
That's great. Thank you, Mike. And Tim, could you also share a little bit more about Slice?
Sure. At Slice, we primarily focused on trying to rethink and reimagine insurance to serve, but not only serve, but match the experience of the on-demand or new economy. So we did start with customer engagement as the center and not the traditional insurance systems and processes and transactions. So we work from, customer engagement and how we can meet the customer experience going backwards. So some examples are, we consider our customers to be customers whether or not they have a policy with us. So we've left the traditional insurance world of you're only a customer when you have a policy. We, of course, also attack the annual renewable policy or fixed term policy and try to make insurance on demand in a similar fashion to things like Netflix and Amazon. And we really tried to separate the idea of a policyholder from a customer so that we can consider them a customer whether or not they have a policy or what policies they hold with us.
Thanks, Tim, and we'll touch on that specific aspect a little bit more later. Thank you. And Ryan, Agency Nation, TrustedChoice.com have a little bit different of an offering than what Mike and Tim just shared. It'd be great to hear a little bit more about how you guys are helping customers in the space currently.
Yeah, I think you started by saying that the purpose of this webinar was to help inform people on how new entrants into the market are changing the customer experience or something like that. My goal is to help the old entrants into the market, the incumbents, provide a new and updated customer experience. So what we do through Agency Nation and TrustedChoice.com is there's really two sides of the business. I'll start with actually the TrustedChoice.com side. So we're very much a technology-driven company, mostly focused on distribution today. So our largest client is the Independent Insurance Agents and Brokers of America. 20,000 insurance agencies, 27,000 locations throughout the U.S., by far the most effective and customer-friendly way of delivering insurance to the marketplace once someone actually gets to them. And that's the problem, right? The problem is that independent insurance agents, to a certain extent, became very complacent in how they addressed customers' needs and therefore became difficult to deal with many independent agencies. And that's what opened the door for companies like the ones that Michael and Tim have started, Jetty and Slice, who are doing a wonderful job of figuring out where independent agents have dropped the ball and are starting to provide that customer experience. So what we do is very much learn from what these guys are doing, and then we have our own ideas and try to help deliver those types of customer experience to these independent agencies, which can look anything from a Marsh or a Willis or a Gallagher, the big, huge mega agencies that everyone kind of knows the name of, all the way down to, Jones Insurance, that's just a father and a son sitting in an office somewhere in middle America on Main Street. And we do that, like I said, through distribution. So we attract over 500,000 visitors to TrustedChoice.com, insurance consumers. We then educate them on the insurance value proposition and that of an independent agent, and then deliver them to what we believe, based on all the data that we have, both from, like I said, over 70 carriers as clients and over 20,000 agents. We kind of mash up all that data, and then we deliver that customer to who we believe is the right agent based on appetite and availability and a whole bunch of other factors. So that's kind of the very technical side of our business. The other side of the house is Agency Nation, where we actually help to educate, entertain, and inspire insurance professionals across the board. We don't just try to help independents, so the content tends to be swung that way, on what's going on in the marketplace, what tools can they use, how should they be thinking about and addressing the needs of their customers If you are forcing your customers to come in and sit face to face with you across the desk, you're losing a segment of the population. There are many people who still want to come in and see you, but you're making a conscious choice to not do business with a segment of the market if you're not evolving. So we're helping agents and holding their hand through that process, and mostly through content, and then we also have a conference. So that's how we're doing it.
That's awesome. Thank you guys for sharing. And that all of what you guys said kind of helps lead into the next area that I'd like to explore. And we'll start with you, Ryan, kind of going in reverse order. In terms of your customers, I guess you have two sets of customers. One is the actual people that are looking for insurance coming to the site, and the other are the agents that are using your site to connect with those customers. Now, as you mentioned, you were trying to focus the agencies a little bit more on how to use digital and incorporate that into their overall proposition that they're offering to customers. So I'd be curious to hear how you see both of your customers, whether they are the actual end customers and your agents, interacting with your brand and actually adopting digital within the process.
Yeah, it's been a really interesting journey, man. So I started, like you said in the intro, I was an agent for 8 years, literally the cliche traditional agency, right? Like my father-in-law literally bought me rubber-soled shoes and said, go out, drive around, walk strip malls, hand them your business card. I cold called people at night. I did all that stuff. And it was as terrible as everyone believes it to be. And that's how I got into the digital side of things. So when we look at independent agents, I started speaking and doing what I'm doing today probably 7 or 8 years ago. And back in those, I want to say those days, it doesn't seem that long ago, I would literally have people in the crowd shout out how I didn't know what I was talking about. They'd be shaking their head no. I've had people from carriers come up to me and tell me, you're going to ruin the industry by getting them to do this. The internet's a fad. I mean, these are things that were said 5 to 7 years ago, which isn't that long. So today, fast forward to today, there is a clear dynamic in the independent insurance space. There are people who, people meaning agencies, the broader sense, who see what's happening. They're looking at companies like Jetty and Slice Labs and their peers and saying, okay, I'm never going to be that, but I certainly can take in and learn from these companies and what they're talking about and start to deliver some of those features to my customers. And they're very much separating themselves from the crowd. Let's call that 20% of the independent agencies that exist. There are another maybe 30% of the agencies that just have no desire to ever make that change. They're perfectly willing to kind of ride their book into the sunset, sell it, and move on, and that's fine. And then there is this middle section who is struggling to make the change, mostly through operational things. And what I've really found, and what I'm the most interested in when I get a chance to speak, kind of one-on-one with InsurTech leaders, is the operations side of the business. Distribution is easy. Like getting a consumer attention and driving them into your business and is the easiest part of this entire game. It's why, the fact that so many InsurTechs are focused on distribution is because that's the low-hanging fruit. The really hard part about this game is operations. How do you have the people? Do you have the processes? Do you have the technology to actually deliver on all these things? And this is the advantage that some of the InsurTech companies have, is that they're starting from scratch with that mentality. And what a lot of independent agents struggle with today is that they have all this legacy system. I'm happy to say that I think they're starting to tear down those walls. You can walk into a room of independent insurance agencies, which actually I will be doing tomorrow at the National Legislative Conference, and talk about these topics, and you aren't the weirdo anymore. That was not the case 3 or 4 years ago. So I think if you just look at retention rates, when a consumer does business with an independent agent, the average retention rate, and this is for like a poor to average independent agent, is somewhere between 82 and 85%. And you look at a good independent agent and they're up over 90. And I think that there is a severe advantage for independent agents once they get people in, but they're struggling to get them in today.
Yeah, that's great. And I totally agree with you in terms of, getting them in the door and engaging is one thing, but if you can't actually handle the business on the back end, then that's going to be troubles later down the road. So going over to Tim, perhaps you can answer the same question, but possibly a little bit differently. How, because you have eliminated kind of the annual renewal policy and you're separating a policyholder from a customer, I'm just curious as to how customers are liking that whole process, how incumbents view you guys, as well as to kind of build on what Ryan was mentioning on the operations aspect of that, how you've built those end-to-end operations into the Slice process to help customers.
Sure. I tried to think back because I've been around the industry for a while, and we used to build back-end systems, and then we were distributors for 6 years as well, digital agents. But I think the annual renewal policy was, I've settled on it, was created so that the insurance companies had an opportunity to underwrite the risk again. So they would underwrite it, between bind and issue, starting from quote. They moved it forward, spent 20 years automating these transactions that, frankly, nobody cares about anymore. But, and they would issue a policy, and the next chance they had to underwrite was at an endorsement, which, again, is another transaction that the customer really doesn't care about, doesn't understand or care about if you're looking for customer engagement backwards, or at a claim, or at a renewal, and then a renewal, which is sort of a forced transaction so that there's an opportunity to underwrite. And I think if we move it from the customer experience backward and not, these transactions that as an industry we spent 20 years automating but just don't matter anymore, then, we realize that, there are things of, we shouldn't have a phobia of interacting with customers. We will interact more with customers, which is not a bad thing. We've been criticized actually for interacting too much with customers, which is really, really strange. So there's a move to a world where underwriting is not a transaction, maybe not underwriting, but gathering data, events, and signals on your customers is not a transaction anymore. It's just an ongoing process, which implies that you can have more interaction with your customer. And those interactions are not always going to be great, but they're important. And so rather than focusing on things like payment, like billing systems, we focus on payment, Square and Stripe and Apple Pay. And, we don't focus on quote buying, but we focus on when a customer registers and becomes a customer, independent of, our things like, a policy or a quote or these transactions which are been created sort of internally and artificially. So I think that more interaction, we found that more interaction is better, but it is different.
Yeah, I couldn't agree with you more. And we'll touch a little bit on the actual interaction and in educating clients a little bit later. Thank you, Tim. Mike, I guess again, similar question as I asked to Tim just now in terms of because you've kind of got almost that one-stop shop as it relates to renters insurance. How have clients been reacting to your brand? How do incumbents see you as well? And what have you guys done as well on the back office standpoint to make sure that the customers have a seamless process? Even when claims, and I remember you and I discussed a little bit of this a few weeks ago too, and Jetty's offering a quite unique proposition there as well, which would be great if you could share with the audience.
Sure. So just to maybe unpack your question a little bit, I'll take each in turn. So with regard to customers, how they've been reacting to our brand, I think that's actually one of the strongest and most positive things that we've been getting from our customers when we're doing surveys or when we're talking to them through our customer service channels is when I looked at your website, when I looked at your product, I understood immediately that this was the company for me. You spoke my language, you broke things down, you made it look good, I felt good about the purchase, and ultimately you take away all the chatter around AI and chatbots and machine learning, which all those things are really great, and I think that there is a place for them in insurance and InsurTech. Ultimately, I think that there are lower level opportunities to make customers happy and provide a great service. And one of those is those things that I just mentioned. And there's a lot of hard work, and it's not just pretty pictures, obviously, to get that done. There's clearly technology that powers the ability to do all of that. In terms of a constituency that you didn't mention that is important for us and one that we keep in mind is our partners as distinct from our customers. So we sell renters insurance direct to consumer through Jetty.com, but then we also sell all three of our products through real estate partnerships with some of the largest real estate companies in the country. We now have hundreds of thousands of units through partnerships. And those guys, ultimately what they were looking for is a single company to come in and solve their needs. In many cases, they're being pitched on a weekly basis by service providers that have one or maybe two of the products, but not the entire suite. Through talking to them and actually working with them, we've already identified new products that could be helpful. And I think ultimately what we're solving for them is integrating into their process and their workflow, integrating into their current technology stack, and they feel good about putting the Jetty brand and service in front of their customers, because these guys are now thinking about themselves as almost like hotels. They're amenities. And so they're constantly thinking about the experience that they're putting in front of their consumers. I'll take your question about incumbents. How are incumbents thinking about us? Honestly, it's hard for me to know. We've met with a number of companies. Ultimately, I think that our tact is not to disparage the industry and tell them that they've done something wrong. I think that ultimately we want to build the service that's right for us. I think that the industry has done a lot of good things. I do believe, and I think that they know that they have a lot of catching up to do with regard to customer service, digital experience, and brand. And I think ultimately there'll probably be ways for us to work together. At the moment, that's just not the case. And so hopefully they're looking at what we're doing and seeing, something positive and something that they can try to emulate over time. And then the last question you asked around back office, I'll just put it simply, and I'm happy to dig in more if there's additional questions. Everything that makes the customers feel good in terms of how easy the experience is comes with a lot of technology under the hood, whether that is reducing the underwriting experience to a single question, or in the case of security deposits, no questions. Ultimately, that is we're only able to do that by owning the full stack, from the policy admin system to all of our data, the front end. And with regard to claims, that's something that can always be improved, and it's something that we have already identified a lot of interesting opportunities to make really simple, straightforward, just as it is to buy our product.
Great. Thank you all for that. Before we jump into audience questions, I'd like to kind of maybe take a little bit more macro overview, because you guys all touched on this, and you've mentioned it for your specific companies, but I think a lot of the listeners that we have on the phone are from a variety of different firms. And one of the things that I continuously think about, having also started as an agent like Ryan, is how do we help to better educate customers on the value of insurance and let them know what they're actually getting. One of the biggest things that we have in our industry is changing the perception of insurance. It's always seen as kind of like a grudge purchase or a necessary evil. So I'd like to get your kind of thoughts on more of a macro level on I know what you guys are doing from your part, but what else as an industry we need to be doing to continuously make sure that we educate customers on the value of insurance and letting them know what they're getting in the coverage that they're buying. And Tim, I'll start with you on this question.
Yeah, no, it's a very good question. I think there's a couple of responsibilities that we have. I think one of the things is definitely nudging people to get appropriate coverage. I think we have to move away from the world of lowest coverage at the lowest price, and I think a lot of the problem starts there with us, being able to encourage people or nudge people to get appropriate coverage. I mean, we're doing it where we have more of a shove, where we're moving people to, we could offer $100,000 liability, but we only offer $2 million liability and so forth. And we're not sort of giving them too many options, but pushing them into what we think they need. It works a little bit better in the on-demand world to do that. But I think that there is a sort of responsibility for that. I think beyond that, I think it'll move, the trillion-dollar question is literally a trillion-dollar question is, can insurance be something that's bought and not sold? Because I think as an industry, we spend about $1 trillion selling insurance, and everybody knows that insurance is a real challenge because it's so expensive to distribute. And I think the answer there lies in ecosystems and so that insurance companies, and we think about that a lot when we in our digital platform, is how can we participate? And we designed it that way from the start. How can we participate in an ecosystem? Because people want to own a car. They don't, want insurance, but if something happens to their car, or they want a house and they want a house to be safe. And I think more and more things will move towards ecosystems that cross traditional industry boundaries. And if the insurance industry doesn't play well means making it easy, simple transactions, attacking a lot of the expense. We left out that really customer experience is also tied to expense. I mean, if you cost a lot of money in the transaction to provide the service, then that's something that's obviously going to be attacked by digital. So I think that insurance, moving digital and moving to the next level, not just direct and call centers, moving to the next level where they can participate well in an auto ecosystem or a homeowner ecosystem, which is not just where you're buying a car and you care about your car, and insurance is just part of the package. I think is an interesting sort of angle, and I think useful for everybody, because we're spending 20% of the premium dollar or more on to actually sell the product, which means it would be a lot more efficient if people wanted to buy the product.
Thanks, Tim, and I really couldn't agree with you more. The ecosystem is something that I've been, my shameless plug here, writing a lot about on Daily FinTech, and actually I've got an article coming out this evening on the U.S. healthcare ecosystem and how I kind of see that taking shape. I think we've got a lot of really good examples out there, or some, especially in China with Ping An, and they've been able to really build that ecosystem for a lot of different areas, which I think has just been amazing. So I think you're absolutely spot on. If we can help build that to where it's kind of more integrated in people's lives, that's going to be a really beautiful thing. Mike, same question over to you in terms of what we as an industry can do to help educate customers on both the perception and the value of insurance.
I think to some extent it's meeting them at the right time and place. That's a lot of what we think about with regard to partnering with our real estate partners. And so I think that's today. It's people don't wake up in the morning thinking that they want to go buy insurance. Tim just said as much. And so to the extent that you can find ways to seamlessly introduce insurance products in a context where they actually understand its value, I think that that's really important, versus maybe randomly calling somebody up on the phone and trying to explain the value, versus trying to identify the time in their lives that they need it and the place in their lives in which they need it. Future, I totally agree with Tim on this one. And it's something that we think a lot about, which is maybe the nuance that I would add is, as opposed to expecting that people are going to want to buy insurance, potentially putting the onus on insurance companies to think about offering a broader range of services beyond just the sale of insurance products themselves. And so if you are able to sell other products, be it financial products or otherwise, provide other services as a way of engaging consumers and then introducing insurance. I think that the perception will be from consumers that, hey, this company is doing a lot for me and insurance is only one component of that. And I think that that's something that we strive to do at Jetty.
Thanks, Mike. And, before I hand it over to Ryan, I think, I can again agree with that, and probably Ryan can too. We've probably both been on the phone, cold calling and trying to find customers, whether it be on the phones or out there in the streets. And as you mentioned, nobody wakes up in the morning saying, I need to buy, well, most people don't wake up in the morning saying I need to buy insurance, and going after them when they might not actually need it is kind of what potentially has led to some of that grudge purchase mentality that we've seen over the years. So Ryan, throwing over the same question to you around educating. And before he answers, if anyone wants to submit their questions, please do. We'll jump right into audience queue questions right after this.
Yeah, so there's so much to unpack in Mike and Tim's comments. A lot of really smart things. I think so. I agree with the ecosystem play. I think that's a really smart and good comment. I don't think it's the be-all, end-all. I think at the end of the day, it's about loyalty to the brand and to the people who operate in that brand. So one of the things that I'm super interested in as the InsurTech movement shakes out is retention, right? Geico's been at this for a really long time. I know it's not the same game, but it is D2C. They are their own insurance carrier. They lost money last year, and their retention rate tends to be about half of what a traditional independent insurance agent is. So if we think about the fact that independent agents versus most technology-driven organizations are less than optimized in terms of their ability to reach a scaled market, yet once they get that customer in the door, the absolute positive fact is those people stay. So what is it about a transaction that from the outside, from people who come from a technology background, what is it what is it about dealing with a human being that they tend to stick? I know that the common example might be, well, it's difficult to switch, so they don't want to do it. I don't know that that's true. Tim mentioned annual policy renewals. I can understand how they maybe don't always make sense, but I never ever had a customer in the thousands of people I dealt with ever say that that an issue was ever annual policy renewals. I think what costs money, whether you deal with a human, which is the classic knock on the independent insurance agency channel, is, oh, you have to pay these humans 15 to 20% commission, right? Well, the fact of the matter is you have to build brand loyalty some way. So that's either time spent on business development professionals going and building resources with other partners. It's advertising, it's content marketing, it's building out retention plans in the back end, it's having a call center. I mean, that 20% is somehow going into building brand loyalty. I think that you take a company, I know there's a couple of guys from the company on the call right now, a company like Central Insurance, right, can easily have 3,000 to 5,000 appointed agencies. Instead, they have somewhere between 500 and 600 appointed agencies. And the reason they do that is because they hand select the agencies that they know deliver an insurance product with a value structure and the care and the time and attention that it takes to really do the job well. And by doing that, they're able to consistently run a profitable business. It all comes out in claims handling and underwriting. It is incredibly easy to, and Tim and Mike don't do this, so I'm not specifically talking about them, but there are many, kind of outsiders who either have startups or are just talking heads, or insiders in the InsurTech space that love to take shots at the independent insurance agency, but can't turn a profit and still haven't figured out how to underwrite. So, every customer experience that feels weird or doesn't seem to make sense versus selling shoes or getting in a taxi cab, at the end of the day, you have to be able to underwrite, you have to be able to handle claims, and you have to be able to do that in a profitable way, or you simply do not have a business. Like, the business of insurance, like at the end of the day, is that you have money to pay claims, and that all can't come from reinsurance. And I think we're going to see a cliff in the relatively near future of companies who've started carriers backed almost solely by reinsurance, and the next Irene to hit Manhattan is going to wipe them out. So it's really, really interesting stuff. I think that I may have gone off course, but I took a bunch of notes. I think that the ecosystem thing, though, is really important. I also am super interested in who criticizes Slice for interacting with customers. That seems like a no-brainer, and literally like today's day and age, you are going to touch more people. You're going to have to interact with them more. Like that seems like I think Tim had to fell off again, but I'm super interested in that. That's just like a given. You have to deal with your customers more, like regardless of where you end up in the channel.
Yeah, I totally agree with you, Ryan. And you know, it's I guess it's a journey for as much of it as it's a journey for some of the incumbent players in the industry to adopt some of these more engaging methods, and for startups that are entering insurance for the first time to understand how the overall insurance process works. It's also kind of new engagement for customers in a way. Now there might be used to having that level of engagement with some of the other kind of day-to-day brands that they use, such as like Amazon's or other retail kind of brands. But from an insurance standpoint, they might have not been as used to it. So I think it's a journey that we're all going on, and completely agree with all three of you guys in terms of the ecosystems, in terms of being there when they need it or they might need insurance so they can have a relevant insurance purchase, as well as that engagement is engagement for retention as well is very key. So thank you guys for that. I'm going to jump. We have a couple of audience questions. We've got a few, probably about another 10 minutes here on the call. So the first one, and if anyone else wants to submit them, please do so. The first one is from Milos. This is for Mike, and but feel free, anyone else that'd like to chip in, please do. But for Mike particularly, how do you see the seamless processes Jetty integrated in E&S excess and surplus insurance industry? There's a lot of gray area and actually underwriting the risk.
So the first thing I'll mention is that all three of our products are in the admitted market. And we do think of that is very important for us because ultimately, even though this is a B2B2C sale, ultimately the consumer is making the choice. And so we want to make sure that our products are approved by all the relevant regulatory bodies in every state, just to make sure that consumers feel comfortable purchasing these products. There are other players in the market that have offered, especially our surety products, so the security deposit and lease guarantee in the E&S market. And I would agree that typically those products are for businesses to make choices, and ultimately we just don't think that the business is making the choice. We think that the consumer is making the choice, so we think that it's important to be in the market. Hopefully I've answered that question. If there's a follow-up, happy to answer it.
Okay, thanks a lot, Mike. The next question is from Neville, and this is for Ryan. Ryan, does the agency want to see simpler products for customers to understand, or do they prefer keeping products complex so that in-person advice is still needed?
I think that the agency that will be pushed aside and shuffled to the bottom of the deck is the second one. Look, the independent agency still may have a value proposition of the human being, right? That personal connection that you get with working with a human, that's part of their competitive advantage. That being said, if you're of a mindset that I'm going to keep things complex so that I can feel important, you're simply going to be run over and mowed down by someone like Jetty, who's making it very straightforward and easy to do business with. I think the bar is easy to do business with, and then we each figure out where we can add value, how we're comfortable adding value, and what we want our advantage to be. So I think if you're going to keep things complex, That's just an agency that I'm probably not going to spend a ton of time on because they just simply don't understand the ecosystem that we're playing in.
Thank you. And Tim, I'm going to ask this one's not specifically for you, but I'm going to ask it to you. And this is from Layden. Is it possible to harvest sufficient underwriting information and still keep the seamless user experience when it comes to more complex risks?
Our position is going to be on that one is going to be yes. We play in the gaps. We argue that there were a lot of gaps. In other words, our existing policies didn't foresee cars driving themselves around or houses being shared or cyber risks. There's just, somebody mentioned, losses in New York City and the gaps, New York City being the most insured place on the planet and the amount of gaps when something happens, when nobody has any cover. So there's a lot of gaps. And when you're going to go into the gaps, you're going to have to underwrite differently. You might not have, 6 or 8 years of actuarial history. And so, our hypothesis is if you have smaller policies where you can iterate quicker, get data points quicker, and if you can move from transactions where you underwrite at bind and you don't touch the underwriting again until renewal, where you can be underwriting, let's call it all the time, which is what we do. We're always underwriting. Then of course you can handle the more complex risks. We just did, where we realized we can't scale our innovation on our own, so we're licensing our platform to other insurers, and we just did a cyber policy, an on-demand cyber policy for the SMB market where it requires real-time data, and it's not data that you're going to ask an insured to give you and rep and warrant in an application that it's accurate, because it really doesn't matter, because the minute after you issue the policy, it's no longer valid. Our rideshare product drives around, our policy is moving, right? So we don't care where the car is garaged, we care where it is at this second and the next second. So I think the answer is yes. I think there's a lot of information. You have to look at underwriting differently, and we have to move away from this static underwriting model to more of a dynamic, because let's face it, we have signals and events, right? We know when cars are driving themselves, and we know when there's people in houses and not in houses. So it's moving to a much more real-time dynamic model and away from the static policy images.
Yeah, and that, yeah, I couldn't agree more. And that goes back to your ecosystem point too, because if we're doing this continuous underwriting, we're continuing to get more information on the customer in terms of their real time. Not only can we use that for pricing, but also in terms of engagement, giving them some preventative measures of the risks that they face, letting them know, hey, maybe you shouldn't be doing this, or maybe you should be doing more of this, to make sure that we not only help ourselves in the industry side in terms of the risk that we're taking on, but also add more value to the customers, which will ultimately lead to some of the retention points that was made by the panel earlier too. Thank you, Tim. Last question is from Ben. And this is kind of an interesting question, because I also wanted to ask it to the panel as well, so I'm going to add a little bit to it. Ben asks, how important is it for agencies to embrace new InsurTech in order to stay relevant? And I guess I'll add to that, how do we see agents and agencies playing in the overall insurance world moving forward? So Ryan, we'll start with you on this one, because I know this is a topic very near and dear to your heart.
Yeah, I think it's pretty simple. If you're not following the InsurTech space and figuring out ways to, I see Ben's company's ProNavigator, right? Canadian-based AI chatbot, probably one of the true players in the space that is actually delivering real substantial chatbot services at scale to the broader independent agency space and other companies. Not to give them a plug, but I think they're doing good work. If you're not following companies like that, and again, I think the key for every company, but independent agencies in particular, is that you can plug all the technology you want into front end. You have to have the operational side figured out to handle what you're going to get. So you put a chatbot on your website and no one mans it, right? It can be the best chatbot in the history of the world, and there's no person to actually execute on the back end, or there's no process to execute on the back end. If it's a technology-based solution, if that's not seamless and working well, then the technology is for naught. So I think that it's an absolute no-brainer. You have to fit your business, and you have to adapt your business to the customers you want to serve, right? If you write railroad contractors, I don't care what Tim or Mike come up with from a technology standpoint. If you want to write railroad contractors, you have to put overalls and boots on and walk out onto the train yard. If you want to write millennial renters in New York City, you need to have a fast-moving, snappy brand that allows them to do that business quickly because they don't want to think about it. So it really depends on the type of consumer you want to work with, but I think at this point, technology is a no-brainer. I mean, there's just too much. It's too good. It's too sound at this point. Many of the pieces have been vetted, so you're not dipping your toe in. It's kind of like, meh, what are you doing?
Yeah, thank you. Mike, anything you'd like to add to that as well?
Honestly, I don't think too much about agents in general, although I do see their purpose in potentially other lines of business. The lines of business that we're in, I don't actually see an opportunity to use agents. With that being said, that doesn't necessarily mean that customers can't talk to human beings. I do think that that's important, and I think that providing a level of service to people, especially if they have questions, is important. And I would just piggyback, just broadly speaking, my opinion is that there is a host of startups and technology companies that are providing great products to the traditional industry. And I think just like every other industry in our economy, I don't see why insurance wouldn't adopt these tools to make their lives more efficient and basically perform better. So,
thanks, Mike. And Tim, any last comments on this before we wrap up?
Yeah, I think I said before, if we were able to wipe out all the agencies, the first thing I'd do is open an agency. So I think, obviously the agency of the future should be a digital agency, and I probably learned almost everything I know about interacting with the customer from agents and spent 6.5 years prior to Slice as an online agent. I think the more frustrating part, in my opinion, if you look at the value chain, because distribution is expensive and difficult and in some cases requires personal interaction, just maybe not the same agency. I would hate to recreate the same agency distribution there is today. I see maybe more of a digital agency, which requires them to look at technology and InsurTech. But, I always found, to be honest, the carriers to be more frustrating, a lot more frustrating than the agents. So, I think if you look at the value chain, in terms of who has the largest expense and provides the most value for that expense, I know the agency, everybody talks about the risk of the agencies, but when you were talking about digital, I think the carriers are actually more at risk.
Hey, Stephen, I just want to jump in and say I completely agree with Tim. If the carriers really wanted change in the independent agency space, they would dictate it. They would demand it. There are many independent agencies that are compensated incredibly well for not changing. And until those, and I'm not trying to throw anyone under the bus, but until I think carriers demand that change, agencies will continue to move slow. I think we're starting to see that even in some super regional carriers that I talk to. So agencies being compensated on things other than just straight premium volume and premium growth. I think that is a trend that will continue to happen. I also think as agents adopt technology, the number of carriers they keep in their agency is going to diminish. And when that happens, there was going to be, when independent agencies stop writing with 30 carriers and start writing with just the 6 that really align with how they want to operate, you are going to see an incredible shift in this industry because those appointments are crucial to a lot of carriers. And it'll be really interesting to see what happens. But I just wanted to, I thought that was a great point that Tim made, and I wanted to jump on it.
Yeah, I'll just jump in. I mean, it's hard to find a really good agent. I remember with the first agent, hopefully he's not on the call, Philip Crenshaw, that I met and hired and worked with, and he was a young guy in an agency. I mean, it's if you're a really good agent, you're customer-centric. I mean, we don't have any difference of an opinion with them. I think the carriers for a long time really, not to be criticizing them, and you can't put them all in a category, but we're sort of like agnostic to the customer, and it's hard to find a really good agent who's fantastic with their customers that you wouldn't want to replicate.
Yeah, thank you guys. And Ryan, I'm glad you chimed in because I was about to say that Tim opened up a very interesting topic, so I'm glad we can expand on that a little bit. But unfortunately, I think that's all the time that we have for today. Mike, Tim, and Ryan, I'd really like to thank you all for joining me and the audience today for sharing your insights. I'd like to thank everyone that was able to tune in to the call. If you have any feedback on the webinar or any recommendations for future webinar topics, there will be a short survey at the end of the webinar. It's going to flash up on your screen. Please fill it out and let us know so we can keep on offering some of these in the future. Also, we have InsurTech Rising US coming May 9th and 10th in Boston. We do have a discount code at the bottom of your screen for 10% off. There's going to be a lot of good speakers there, a lot of good panels, and it'll be a great event as well. We'll send an email with the code over the next day too. So we really enjoyed bringing this webinar for you. If you want to read more thought leadership or topics on this, you can go to the InsurTech Rising community page. There you'll see some articles, some interviews, as well as the recordings of the webinars. And with that, I'd like to thank everyone for your time today and have a good rest of the day.
Thanks, Stephen.